Welcome back. Banks are under intense pressure. That is the big talking point. Both Axis Bank and ICICI Bank, they are really leading the decline. 250 points down for the Bank Nifty and two pockets of stress. ICICI Bank and Axis Bank. Are these NPA concerns or pure profit booking by institutional investors? Hard to establish that. But prima facie, there is a lot of institutional selling, at least in banks, which is really disturbing the Nifty. So let's stay with banks. Mr. Aditya Puri, Managing Director of HDFC Bank, joins us. Bear in mind, HDFC is one of the best performing Nifty 50 stock in last 1 year. Mr. Puri, good morning. Thank you for joining us. What a delight and a pleasure to have you on ET Now. Let's talk first about the broader take on economy and on the banking sector. How much do you think will the US economic stalemate or the US shutdown will have impact on emerging markets like India?
No, I think most of what is happening in the US is already priced into Indian markets. Will it have some effect? Possibly, but some positive, some negative, and that's always two sides to the coin. So will the delay of QE3 be further delayed? Probably yes. If this closure lasts for too long, it could affect exports, but I think nothing major. We'll have to see how it plays out.
Right. Mr. Puri, hi, morning. The RBI governor took a bold step by increasing the repo rate by 25 bips in, the September policy. Do you expect RBI to raise rates further this year if inflation continues to remain high?
No, I think, see, if you ask questions in isolation, they become difficult. Just follow what the governor said. He said inflation has gone up, which it has. WPI went up, consumer inflation went up, core inflation went up. To address that problem, he's raised long-term rates through the repo rate mechanism on one side. On the other side, by reducing the rates on MSF, as well as making his intention very clear that there will be further reduction depending upon how macro events like the rupee dollar, like what happens to oil play out. You could see that the July 15th measure being completely reversed. What that should do is, it gives time for him to see whether the harvest results in inflation coming down, in which case you can see some reduction in repo rate. I would say it's unlikely, but you will definitely see, if he carries on with the MSF reduction, as well as the liquidity that will come into the system from the swapping of the dollars that the banks are bringing in, short-term rates, I would say, other things being equal, should be going down.
Let's talk about specifics, Mr. Puri, then. Are you experiencing any pressure on cost of funds because the economy is slowing down, fixed deposits are under pressure, and if you are experiencing pressure on cost of funds, are you looking at increasing your base rates?
I think that's an ALCO decision. Yes, we are seeing, by definition, you will see when a refinance is reduced and the refinance rate is high, obviously the CD and the bulk deposit rates go up. So there is some increase in the cost of funds. Whether we raise base rate or not, that is an ALCO decision.
We're seeing consistently, though, low figures in industrial production and various PMI numbers, etc. Do you believe growth will take some more time to pick up?
Growth, like it went down gradually, will come up also gradually. But the good things that you have to take into account are we have a good monsoon. I was talking to my local people here, and they said they went to the Anaj Mandi. The Anaj is already pouring in. So this is the second good harvest. If it's a good harvest, normally rural spending picks up. So I think that will add about 40 to 50 basis points to GDP growth. You also have exports going up. You also have the Cabinet Committee on Investment has cleared a lot of projects which are not new projects, and so there will be some delta for investment. I think the third and fourth quarter will be better than the first and second quarter, but growth will pick up gradually. Our own estimates is somewhere between 4.7 and 5 for the full year, given that we did 4.4 and probably somewhere between 4 and 4.4 in the second quarter. I think you would have to do closer to 4.8 and 5 to get that figure. Thereafter, if the rest of the policies follow through, like GST, etc., are based on our savings rate of 31% and a proper capital output ratio, our sustainable is somewhere between 7 and 7.5%.
Mr. Puri, while your peers are seeing asset quality deteriorate substantially, your bank has averted that. But in the last quarter, we did see a marginal increase in your NPAs, non-performing assets. What is your take on NPAs or asset quality going forward now?
Let me rephrase that. When the economy slows down, some amount of stress is a given. Have we seen any stress that is not in line with the probability of default into our product programs? No. Are we seeing any further stress? Just to give you at this point of time, there could be some marginal increase, 5-10 basis points in NPLs, but net NPLs would remain about the same. Our NPLs are about 1.01% with net of 0.2. Before you ask the next question, our restructured is only 0.2 and it's not increasing.
So what's your outlook on margins, and are you seeing the pressure build in at the moment? Are you confident of your margins being above 4% levels even now?
We don't give guidance, but I'll give you general gyan. The fact of the matter is, in the short run, by definition, since monetary transmission takes some time, there will be some compression of margin this quarter. It will be made up as we transmit it along the way. It will be made up in the balance of the year. So the range for HDFC Bank, which has been between 4.1 and 4.4, will remain.
Mr. Puri, really appreciate your time, and thank you for accommodating this interview request. That was Aditya Puri. Well, he's making a case that for this quarter NPAs could go up marginally, but in general he's confident of his book quality, and is certainly confident that his NIMs, net asset NIMs, which is net interest margins, they will not go haywire given what is happening to the Indian economy. 622 rupees for HDFC Bank. ICICI Bank has cracked below 900. So it's really the private banking space, the large 2-3 names which are dragging the markets down. IT is holding on. Tech Mahindra is still a big outperformer. Tata Motors is holding on.